with about 26 minutes to the top of the hour. That's the hour of 10 o'clock. And we are back, and this time around, we are going to be discussing the aspect of money laundering. And when I talk about money laundering, I'm trying to talk about the aspect of the money that is being borrowed from the individuals. For example, you could be in a need of about $1 million you get in shillings, and instead of going to the bank or a microfinance center, you decide to go to an individual to ensure that you can actually get that money real fast. But at the end of the day, you pay back that money with a big interest rate. So imagine these people are going to charge you roughly about 20 to 25% interest. That's on a monthly basis. But as compared to the banks, they charge about 18% interest, and that's coming to a year. And that this time around, the individuals come up to make it quick for you, but you pay it back with a high price of paying a very high interest rate. So this time around, we are going to look at money laundering. Of course, I'll say it has the advantages and the disadvantages, because I'll look at the aspect of obtaining a loan from the bank is quite lengthy, a lengthy procedure, because quite a lot is being reviewed, because by the time the bank is going to give you the money, they must really examine you to the maximum to ensure that you are not a risk, you are not a risky investment. And it's going to start with quite a lot of securities that you should be in your possession to ensure that you can actually obtain this loan. And of course, looking at your job security, looking at your assets, quite so many, and also the procedures. Yes, you could qualify with the assets, but also there is quite a long procedure when it comes to obtaining that loan from the commercial bank. And with the money lenders, they make it real quick. They may not really necessarily mind a lot regarding your job security or something regarding with your ability to pay back. But at the end of the day, once they have just a simple collateral from you, that's going to be a real quick justification for them to give you that loan, and it's made very, very easy for you. And of course, discussing about this particular report still, why people resort to money lenders is simply because of the accessibility of the loans as compared to the banks, which include quite a lengthy procedure. And of course, I'll be returning back to share more highlight regarding this particular topic. And we are going to go into a clip right here that's by Rachel Muhwezi, the Microfinance Institute manager, discussing this particular topic. We return.
So I have, I think, more than 10 years in credit management. But a borrower, a loan goes bad from the time you have disbursed it. A loan goes bad from the time you have done what? Disbursed it. So if you disburse money today, you have to, either it is going to be recovered or not. But it all starts from the borrower selection and the credit worthiness of your borrower. Did you assess that borrower well, that indeed they qualify to take 50 million? Because the security will not pay back your loan. What will pay back your loan is the capacity for a borrower to pay, not your collateral or mortgage, but the capacity for the borrower to pay. As we are in this competing environment, the financial sector is so competitive, but one of your competitive advantages you can use, try to reduce your interest rate. You will outcompete most of them. Try to reduce your what? Interest rate. Yes, you have to remain also earning. The higher the price, the more income. But now that the problem is delinquency management, assess your borrowers very well. Disburse the right amount to the right borrower. And also look at the tenure. And then money lenders, when you see someone has failed to pay, if you give me 10 million, and so far I have paid back 10 million, in 10 million, you wanted interest of 5 million. If you have recovered your principal, clap your hands. Then the 5 million, negotiate with the borrower. Because when you look at the successful stories of the people who have spent in this business for 20 years, the moment you recover your principal, now start negotiating on the interest. that the interest was supposed to be 5 million. Can you pay 1.5 or 2 million? We close this chapter. I'm telling you, you'll have more borrowers, and that borrower will recommend more borrowers to your what? To your business. How are you managing your business? The more delinquent loans you have, they all start from the day you have disbursed the loan. You fail to disburse the right amount of money, you poorly select the borrower, then you fail to assess the creditworthiness. And again, the good news we have, very soon all licensed Tier 4 institutions will be joining what we call CRB, Credit Reference Bureau. So you'll be able to see that Mr. James has a loan with ABC, but Mr. James has come to get a loan from my company, and he's not paying. So you make a decision whether you should pay, you should lend that money to that person, or you shouldn't lend the money. So the CRB very soon, the moment the regulations come out, and these regulations are being spearheaded by Bank of Uganda, they are opening it to Tier 4 sector. And we have a company which has fronted to take over the Tier 4 sector space to give these reports at a lower price. You will sort out the problem of the defaulters. I know even as borrowers, you can be very stubborn. You borrow from here, you fail to pay, and you borrow from here, again you fail to pay. I borrow from ABCD, I pick that man, I pay XYZ because I need to get a bigger loan. So after getting a bigger loan from XYZ, I don't do what? I don't pay. But the need for money will never stop. This person will always need to do what? To get another loan. And these are very few people in that space, as long as you conduct your business very well. Obtain a loan from the bank. They do not compound your interest. Aren't they using compound? Aren't they charging interest? Isn't it? You obtain a loan from the bank at 18% per annum, but a money lender will lend money at 12% per month. Why would you compound interest when even your interest charge is high? You get? Your interest charge is what? Is high. Because I believe if you're getting money for business, banks now, they lend money at 18%. So if it is a business loan, it is the discussion between you and your financial institution lending to you. But I believe they will not go beyond 18% per annum. And the money lender is going to lend the money at 12% per month. How much have you charged per annum? 12 times 12 months. How much have you charged? More than 100%, isn't it? Aren't you making profit? So can't we go away with compounding interest? Are you seeing the mathematics behind it? Why we should not compound what? Interest. If you're lending money to me, you're contributing to, you're having a social impact. You want me to improve, but you're not depriving me to make me more what? Poor.